going on, guys? It's Aaron from Market Alert, giving you your daily market alerts for stocks. In today's video, let's talk about why Royal Caribbean, Carnival, and Norwegian Cruise Line could all plunge on Monday. But before we get into it, if you like what we do here, smash that like button and comment below what you think will happen to cruise line stocks this week. Alright guys, back to it. As you might know, due to the global pandemic, it's been an absolute tragedy, with more than 100,000 deaths and 1.6 million cases in the US and worldwide as of Friday. Public health measures to keep the general population safe has created unprecedented economic distress that's threatened to make the fundamental business models of many companies completely unviable. The hardest blows from the crisis is the cruise ship industry. Shares of Royal Caribbean are down by 70% so far in 2020, and Carnival and Norwegian Cruise Line has seen even bigger declines, between 75 to 80% this year. With the companies all suspending their cruises beginning in March, revenues has essentially disappeared. Over the past week, we had finally seen hope for cruise ship stocks. Now though, the industry faces a new challenge that could send Carnival, Norwegian, and Royal Caribbean into a new collapse. But here's where things get interesting. Late Thursday, the CDC extended its previous no-sale order for cruise ships. As per the previous orders, the CDC had recognized the voluntary 30-day suspension that Norwegian, Carnival, and Royal Caribbean and others had made, and therefore had chosen to not make the no-sale order provisions apply. However, this time, the CDC's order explicitly applies to all cruise ships. The order forbids cruise ship companies from operating within US territorial waters. It also requires those companies to come up with plans on how to deal with COVID-19, which are then subject to review and approval by both the CDC and the US Coast Guard. The plans will require some specific provisions, including monitoring passengers and doing medical screenings on crew members, training crew members on preventing the spread of COVID-19, and planning how to manage and respond to COVID-19 outbreaks on board. It'll take some time for cruise ship companies to put this all together, and every day is a potential day of no revenue. The CDC also set a potential timeline on how long the no-sale order could remain in effect. If the Secretary of Health and Human Services declares that the corona pandemic no longer constitutes a public health emergency, then the order could be lifted immediately. Unfortunately, that doesn't set any firm time at which cruise ships can set sail again. And with 55% of displaced customers opting to get refunded for their trips despite the incentive for a 125% in onboard credit for future trips, if the coronavirus continues to plague US in late July, then you can expect the CDC to extend the no-sale order further. So what does this mean for investors in these companies? So the investors in Carnival, Norwegian, and Royal Caribbean have celebrated the idea that if the cruise ship operators can just get through the current crisis without using up all their financial resources, then their long-term future looks bright. Carnival currently trades at about 5 times its 2019 earnings, while Royal Caribbean's market cap is less than 5 times its 2019 net income. Norwegian trades even more cheaply, at just 3 times its income over the last 12 months. There's no question that if the three companies can keep meeting their obligations to creditors and prevent them from forcing the cruise line operators into filing for bankruptcy protection, then current shareholders stand to see huge gains if earnings return to the pre-coronavirus levels. Until then, though, the stocks will rise and fall based on their probabilities of staying out of bankruptcy. In driving the harsh reality of the situation home to shareholders, the CDC might as well prove responsible for sending shares of Norwegian, Royal Caribbean, and Carnival sharply lower on Monday. Thanks for tuning in, guys. If you like what we do here, be sure to hit that subscribe button and comment below.